Most entrepreneurs walk right past commercial property because they assume they need 25% down to buy a building. But what if I told you there's a loan that lets you buy commercial property with as little as 10% down, fixed rate, 25-year term, designed specifically for business owners? It's called the SBA 504 loan. It's been around for decades and almost nobody talks about it. By the end of this video, you'll know exactly how it works, who qualifies, and how I'd use it if I were planning to buy some property tomorrow. I'm Lexi Sims, commercial real estate advisor in Houston, Texas. Let's get into it. So, quick context. If you've been watching this channel, you know my whole focus is helping business owners stop renting and start owning their commercial space. The building that pays you whether you want to keep working or not. But here's the question I get more than any other. Lexi, I don't have $250,000 sitting in cash. Is this even possible for me? The answer is almost always yes, and the SBA 504 loan is the reason. Let me break it down. The SBA 504 loan is a commercial real estate program created by the Small Business Administration specifically for owner occupied commercial property. The phrase owner occupied is the key. That means you, the business owner, have to operate your business out of at least 51% of the building that you're buying. That's the key condition that opens up the door to this program. So, if your business occupies at least 51% of the square footage, you qualify for SBA 504 financing. The remaining 49% can be leased to other tenants, and those tenants are the ones that are now paying down your mortgage. So here's how the loan works. It's actually structured into three different pieces stacked together. So piece one is where a bank gives you 50% of the purchase price as a conventional loan. Piece two, a certified development company or a CDC gives you 40% as a fixed rate SBA backed second loan. And then the third piece is you, the borrower, you put in the last 10%. And that's really the magic. Most commercial real estate requires 25 to 30% down, but this program cuts that down to 10%. Now, there are some cases where you need 15%, like if it's a special use property like a hotel, gas station, or if your business is brand new and doesn't have a lot of history. But for an established business, buying a standard commercial building, 10% is the number. Let me show you why this matters with some actual numbers. So, say you find a $1 million commercial property. Maybe it's a small office building, a strip center, or a flex industrial space. So, with a standard commercial loan at 25% down, you need $250,000 cash plus closing costs. With SBA 504 at 10% down, you need $100,000 plus the closing costs. That's a $150,000 difference. For most entrepreneurs, that's not a small gap. That's the difference between yes, I can do this and no, I can't. But the down payment isn't even the best part of the SBA 504 loan. Two other features are even more valuable. So first is going to be the fixed rate on that SBA piece. The 40% that comes from the CDC has a fixed interest rate, not variable, not adjustable, it's fixed for the entire 20 to 25-year term. So when rates move like they always do, your largest piece of financing doesn't move with it. The second is going to be a long amortization period. The SBA 504 loans can be amortized over 10, 20, or even 25 years, depending on the use case. Most real estate gets that 25-year term, so that keeps your monthly payment low and your DSCR strong. And if you don't remember DSCR, watch my 5 numbers video, and I'll put a link in the description so that you can watch it there. So who qualifies for the SBA 504 loan? There's essentially 3 criteria that you would need. Number 1, your business has to meet SBA size standards. For most industries, that means under 20 million in tangible net worth and under 6.5 million in average net income over the last 2 years. Most small and mid-sized businesses are usually well within these limits. Number 2 is going to be that occupancy piece where you have to occupy at least 51% of the building that you're buying, or if it's new construction, that number goes up to 60%. Number 3 is that you have to show that you can repay the loan based on your cash flow. The lender will look at the property's projected income from the rents, but your business's financials are also going to be an important piece. And that's basically it. Sole proprietors, LLCs, S Corps, C Corps, they all qualify. And there's also no requirement that you have to have perfect credit, though stronger credit obviously helps with the 50% that is coming from the bank. So let's run a full SBA 504 example so you can see what it looks like on paper. So let's say we have a small business owner, a contractor, who finds a 6,000 square foot industrial flex space with an asking price of $1.2 million. So his business needs about 3,500 square feet to be able to operate, and that comes out to 58% of the total building, so he's within the occupancy requirements. He plans to lease the other 2,500 square feet to another contractor at about $3,500 a month And so for the year, that comes out to $42,000 in tenant rent. And so here's how the loan would be broken down with the different components. You have the bank loan at 50%, the SBA CDC loan at 40%, you have his down payment at 10%, and then you also have closing costs to incorporate as well. But that puts his total for this one at about $145,000. Based on a 25-year loan at the current rates, that would make his monthly payment about $7,500 a month. His tenant pays $3,500, so his net out of pocket for the month is going to be $3,700 a month. And here's the part that a lot of people miss. He was already paying $2,800 a month to lease 3,500 square feet of space from somebody else. So the real increase to him on a month-to-month basis is $900, but he owns a $1.2 million building. He's building equity, he's capturing appreciation, and he has a tenant covering nearly half of the monthly cost. And then in 25 years, that building is paid off. He may be 75 and still doing what he loves, or he may have sold the company and be living on the rent from both units, which by that time will be much higher due to the market increases. And that's how the SBA 504 works in practice. Here are two mistakes I see with business owners when it comes to the SBA 504 loan. First is that they assume that their bank can do the loan. Most regular banks don't process SBA loans, so you'll need a lender that's experienced with them. Some banks have an SBA department and some don't, so it's always a good idea to ask before you assume. The second one is going to be that they wait too long to start the process. SBA loans take longer than a traditional loan. We're looking at 60 to 90 days from the offer time, so trying to get it done in 30 days is going to leave you in a bad situation. Two other things to know: there are some upfront fees that come with the SBA portion. They get rolled into the loan, so you don't pay them out of pocket, but they do exist. And then there's also a prepayment penalty up to 10 years. So if you decide to pay it off in year 3, there will be a small penalty that comes along with that. So it's a good idea to hold on to the property. Honest truth is that the SBA 504 loan isn't going to be right for everyone. If you can't commit to staying in the building for at least 10 years, then the timeline math is not going to work in your favor. If your business is brand new with no operating history, then you might not qualify for the loan. If you're buying a property purely as an investment and don't plan to occupy it, then this isn't going to be the loan for you. And if speed matters more than the terms, conventional financing might serve you better, even at the higher down payment. But for everyone else, the SBA 504 loan is one of the most powerful tools in commercial real estate. If you've made it this far in the video and you're thinking this might actually work for my business, then that's a conversation that I want to have with you. Book a 15-minute call. The link is going to be in the description. And then next week, I'm doing something extra special. I'm going to be pulling an actual property that's currently listed, and I'm going to be running down all 5 numbers on it. You'll see exactly what I look at, what I would negotiate, and then we'll get to the point where I would say whether or not I would make an offer on a property like that. So subscribe and hit the bell so that you don't miss it. And also drop your questions in the comments. I'll be sure to read everyone, and some of them may even lead to a future video. My name is Lexi Sims, and I'll see you in the next video.